Hi there, very good morning. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. Over the next 1 hour, we'll take you through all the global and domestic cues that you must watch out for and also tell you about the stocks that you need to keep on your radar today. But before that, let's get started with an eye on the globe and see how Wall Street fared overnight. That is the last week and how futures are standing. And it's a rather, steady set. As far as US futures are concerned, Srishti, now they were little changed overnight. This round, remember, this is after a mixed week that we saw on Wall Street. It was marked by a rotation out of big tech and into lower valuation areas of the market. Now, going ahead, investors are also bracing for a busy, slate of US economic data in the days to come. Well, let's talk about the futures. The Dow Jones Industrial Average futures, they slipped marginally. S&P 500 futures were down about 0.1%, whereas Nasdaq futures, they dipped about 0.2%. If we talk about the moves last week, tech weakness weighed on the broader markets. The S&P 500 fell about 0.6%, and the Nasdaq composite, that slid more than 1.5%. This, of course, was pressured by declines in AI-linked names such as Oracle and Broadcom. The Dow Jones Industrial Average, which has less exposure to tech, that actually bucked the trend and gained more than 1%. If we talk about individual stocks, Oracle, that tumbled nearly 13% for the week, while Broadcom dropped more than 7%. The S&P 500 technology sector, that fell 2.3%. Now remember, that's highlighting the rotation that we are seeing away from AI leaders. If we talk about some of the cues that you have to watch out for as far as the week ahead is concerned, economic data is going to be in focus this week. November non-farm payrolls data, October retail sales data, all of these are due Tuesday, and this would be followed by delays that were caused by the government shutdown. Apart from that, investors will also be watching out for Thursday's release of the November Consumer Price Index, that is the inflation data, for any clues on the inflation outlook and the Fed next move. So yes, Srishti, a very data-heavy week coming ahead, but so far the futures seem pretty steady.
All right, that's about the global handover, especially when it comes from the US markets. But with this, let's also tell you what else we are tracking in terms of the movement when it comes to commodity as well as gold prices. As of now, what we are getting to see is that gold is trading absolutely flat around that $4,332 mark. But for silver, interesting moves over there, because just on Friday, after touching its all-time high levels, yet again silver slipped almost 3%. Back on Friday, as of now, is holding steady at around $62 per ounce mark. But when it comes to the gold prices, beg your pardon, when it comes to the Brent oil prices, then there we are getting to see that there has been a bit of a profit booking. It's down almost 0.3% as we speak right now. But dollar index too is something that the global markets and the participants over there are also tracking, hovering around that 98 odd mark. So decent moves, but yes, some interesting moves in gold as well as silver is something that the market participants are watching out quite closely.
All right, so we continue to watch gold and oil prices, but let's move on and get you some of the top global stories that we are tracking this morning. And let's start with the headlines that Trump is making. Now, he's reigniting his feud with Federal Reserve, saying that he wants a new Fed chief who will cut interest rates. Calling Jerome Powell incompetent, Trump accused him of bias and claimed that the Fed is blocking growth, raising fresh questions over central bank independence and if Trump returns to power. So yes, let's take a look at what he had to say.
I'll be picking a new head of the Fed soon. Our Fed person is absolutely, despite him, we have numbers that really nobody's ever seen, Vince, right? Despite him, we have numbers that nobody's ever seen before. We're fighting through him, and we'll soon have a good head of the Fed who's going to want to see interest rates go down. But we're fighting through higher interest rates, but the interest rates are coming down despite him. He's an incompetent person who suffers from Trump derangement syndrome, okay? It's one of those little problems. We have many of them. But we're fighting through that stuff, and we have a country that potentially is geared to have the most incredible golden years ever.
All right, and the U.S. security experts say that the Ukraine's willingness to drop its NATO bid is unlikely to shift peace talks with Russia. Analysts argue that NATO membership was never realistic and remains a non-issue, with future negotiations more likely to hinge on security guarantees and continued Western military and economic support.
All right, then let's move on and get you the latest on Japan. Now, Japan's business sentiment has hit a 4-year high in the December quarter, with the Bank of Japan's index for large manufacturers rising to 15. A weaker yen and a stronger AI-linked global demand that has boosted confidence, with big firms planning capital spending up to nearly 13%, which is the strongest investment intent in the past 2 years.
And the death toll from a mass shooting at Sydney's Bondi Beach has risen to 16 after police confirmed a father and son duo carried out the attack during a Hanukkah celebration. 40 people remain hospitalized, making it Australia's deadliest gun attack in nearly 3 decades. Authorities are treating the incident as terrorism and investigating anti-Semitic motives.
Lionel Messi's GOAT India tour turned into a multi-city spectacle, drawing huge crowds across Kolkata, Hyderabad and Mumbai. Now, the Argentine icon began in Kolkata, where his appearance at Salt Lake Stadium drew massive fan interest, but also controversy, with football officials later flagging protocol lapses and political overtones. Other than that, in Hyderabad, Messi's visit was smoother and more focused on fan engagement, underlining the sport's growing footprint beyond traditional football centres. The tour peaked in Mumbai, where a packed Wankhede Stadium saw Messi share the stage with Sachin Tendulkar, exchange jerseys with Indian legends and launch Project Mahadeva to support young football talent.
All right, but with this, viewers, it's now time to slip into a very short break in this edition of Market Cafe. Don't go anywhere. As we come right back, we will be talking and telling you all the stocks that you should be watching out for.
Hi there, welcome back to ET. Now you're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma, and it's time now to take a look at how the Asia Pacific markets have opened up. And after a weak handover that we have seen from Wall Street, that is in the week gone by, we're expecting a very negative part for the Asian indices as well. If you talk about China's Shanghai index trading 0.4% lower right now, 3,873 is the level where it is at. Hong Kong's Hang Seng Index, that's also continuing to trade in the red, down nearly 1% right now, just managing to hold on to that 25,760 level. Apart from that, Japan's Nikkei, that's also trading more than 1% lower, 50,162. That's where the index is at, just managing to hold on to that level. If you talk about Australia's index, ASX 200, that's also trading 0.7% lower, 8,638 is the level where the index is at. So yes, very negative moves as far as the Asian markets are concerned. If you talk about South Korea's Kospi index, that's also trading more than 1%, in fact 1.5% lower right now, just managing to hold on to that 4,100 level. So yes, very negative moves. If you talk about Nifty, we did manage to end above that 26,000 mark on Friday, but for today we are expecting a negative start for Nifty as well, following the Asian peers. 92 points of downtick is what we are expecting at the start for D Street. So yes, a very negative start, Srishti, is what is likely for the Indian markets as well, following that weak handover from the Asian peers.
All right, so it's a 92 points of cut that GIFT Nifty is indicating. But amidst this market, there are indeed a lot of stock-specific action that is expected. So let's get that list. Which are the stocks that are going to be in focus today? And firstly, let me take it across to my colleague Ishika, who is standing by with a list of stocks to be washed out today. Good morning, Ishika.
Good morning. So some of the stocks in action today will be Swiggy. Now Swiggy has completed rupees 10,000 crore QIP. Next up we have Ashoka Buildcon, right? The company's joint venture has received an LOA from BMC. The bid for this project was rupees 1,041 crores, and Ashoka Buildcon has 50% share in this JV. Moving on, we also have Vodafone Idea in news. Now according to ET report, VI may get 4 to 5 years of AGR dues moratorium, and dues could be halved. Next up, we also have KEC International on a positive note has bagged order worth 1,150 crores in T&D business, civil and structural works for a 150 megawatts thermal power plant. Next up, we have BEL in a positive note as well. It has received an order worth 776 crores. It has been a major order received, including in indigenous counter unmanned aerial system, software-defined radios, and anti-drone systems. Next up, we have Excelsoft Technologies. It has reported its quarter two earnings first after its IPO, and the revenue is up 16% quarter on quarter. EBITDA margins are at 17.6% versus 7.4% quarter on quarter. Next up, we have Astra Microwave Products. On a positive note as well, has received a domestic order worth 124 crores from its joint venture company, Astra Rafael Private Limited. We also have Wipro in news. Now, Wipro and Microsoft have announced a 3-year partnership to help enterprises become frontier ready, and Wipro is deploying over 50,000 Microsoft Copilot licenses. Furthermore, Wipro will also be expanding its strategic partnership with Google Cloud by adopting and deploying the Gemini Enterprises AI platform across its global operations. Furthermore, we also have Aurobindo Pharma on a negative note. US FDA has inspected its Unit 5 and API manufacturing facility in Telangana from December 1 to 3rd, and US FDA has also issued Form 488. Thank you. Back to you.
So lots of stocks to watch out for. Thank you, Ishika, for that entire list. But on that note, we'll slip into a very short break. Be right back with more news and updates on the other side.
With of Baroda.
Now let's put the spotlight on some of the macro data, and it was the retail inflation for the month of November that saw a marginal uptick of 0.71%. This was a tad bit higher than the estimate of 0.7%. Now remember that in October, retail inflation stood at 0.25%, the lowest level since the beginning of new series. Now, increase in the prices of vegetables, egg and meat and fish, spices, fuel and light were the primary factors that led to the rise in the month gone by. But now food inflation continues to remain in the deflationary territory, because in November, the fruit prices stood at a negative of 3.91%. Rural and urban inflation also declined in November, and core CPI reduced to 4.34%, but it still remains above RBI's 4% target. We caught up with experts to decode the numbers. Listen in.
With food moving lower, irrespective of whether we see immediately a little bit of higher inflation or lower inflation, the more important thing will possibly be that the volatility or the fluctuations in the series you can expect eventually to be slightly less. It's not that it will be dramatically less, but given that it will be changing towards a lower weight for food, eventually it will reduce the volatility or the fluctuation in the series. I think that will be something very, very important. The weight of core will possibly see a little more, but I think in this particular context, very important point that its core is also defined in one particular way, and precious metal, gold and silver is a part of that at this moment, which is contributing a very significant component of the overall core inflation uptick also, what we are seeing now. So it's important to continuously, not only, you cannot change the basket every now and then, but we analysts need to actually do that, take into account the fine nuances, and that will actually give us the proper picture on a steady state basis.
Completely in line with expectation. Even our estimate was around 0.7. Food inflation, the pace of decline has moderated a bit, but it's also a reflection of adverse base or less supportive base in the month of November. So that tends to impact the year-on-year numbers. But beyond food, what I wanted to highlight is if you look at core inflation, which is you remove gold and silver from core inflation, that has hit another fresh low of around 2.5% in November, a fresh historical low. So showing that there is a negative output gap in the economy. So from an inflation risk perspective, that shows that core inflation will likely remain benign with negative output gap in the economy. For the full year, we're still tracking at 2% for the year, FY26. Even next year is tracking close to 4%, which is in line with RBI estimates. So we don't see too many risks on inflation right now. Food, it's showing broad-based moderation. We saw a brief spike in tomato inflation, but that is now beginning to subside, so which is a good sign. Rabi sowing is off to a very strong start. We've got good reservoir levels. So the food outlook looks very positive.
All right, so that's all about the inflation number, but let's move on. And as we come closer to wind down this year, let's take a look at how D Street has performed, which are the stocks and sectors that were outperforming the benchmarks this year. Sneha is here to take us through the entire roundup.
Well, yes, so winding down on the year, and this is the way the year has gone by on D Street. Let's start by talking about the indexes first. Nifty, a solid 10% uptick coming in, 9.8 to be precise. Nifty mid-cap has also closed with very nominal gain of 4% for this calendar year. On the flip side, Nifty small cap, the only index under deep pressure, a 9% cut coming in for calendar year 2025. Now comparing Nifty's move with other asset classes, Nifty has grown about 10%, but take a look at silver. The kind of run-up that we've seen, it's been a shining year for silver this time around, a 102% uptick. Half of that almost is gold at a 60% run-up, and Bitcoin, in fact, cryptocurrencies, most of them have seen a negative rate of return, and Bitcoin has been the loser over there, a 2% cut on Bitcoin. Let's now shift focus and talk about index-specific gainers and losers. Let's talk about Nifty gainers. Biggest gainers, Bajaj Finance, Maruti Suzuki, Eicher, SBI Life and Shriram Finance, seeing gains between 44 and 51%. On the flip side, let's talk about the top Nifty losers of the year gone by. Trend, Tata Motors PV, TCS, Infosys and Power Grid seeing cuts between 14 and 43% lower on a year-on-year basis in their stock price move. So yes, these are some of the top laggards. Moving to the mid-cap space, top gainers over there include L&T Finance, a 121% uptick, very solid for something like an LTF, followed by 101% uptick in AB Capital, so a doubler over there as well. 77% higher for Muthoot Finance, AU Small Finance Bank and BSE also giving very attractive returns. On the flip side, the biggest mid-cap losers at Ireda, Kalyan Jewellers, OFSS, Premier Energies and Oberoi Realty. So largely from all, it's a mixed bag of losers coming in from different sectors as well. Shifting focus to the small cap space, Navin Fluorine, Loris Labs, MCX, Narayana and Hindustan Copper are some of the top gainers with gains between 47 and 70%. On the flip side, the top losers from the small cap space include Ola Electric, a 60% cut, as is the case with Tejas Networks, sharp cuts on Brainbees Solution, which is Newgen Software and Whirlpool of India, all of them seeing major cuts. Sectorally then, it was the year of the Nifty PSU banks, a 25% uptick coming in, followed by 21% in auto, metal, banks were also not too far away. On the flip side, the year is the sectors that are going to be ending in the red for the year gone by, Nifty Energy, Pharma, FMCG, IT, and the top loser this year is Nifty Realty, an 18% cut on that index on a year-on-year basis. Let's take a look at some of the top gainers on the PSU banks front. Indian Bank, Canara Bank, Bank of India, Union Bank and SBI have done well. And on the flip side, let's take a look at the losing stocks from the top loser, that's Nifty Realty pack. Anantraj is down 41% on a year-on-year basis, followed by Brigade, Oberoi, Godrej Properties as well as Lodha Developers. Moving away from equities, let's talk about what the FII and DII activity has been for the year gone by. FIIs continue to be net sellers, 2.83 lakh crore worth of selling, but the DIIs more than made up for it by manifolds rather, 7.3 lakh crore of buying, what we've seen from DIIs this year. Lastly, let's talk about the rupee, the biggest talking point right now in the free fall that the rupee has recently seen. Rupee has been a mass underperformer this time around. The Russian ruble has done very well, a 48% growth on a year-on-year basis, followed by the currencies of Brazil, South Africa, Malaysia, Thailand, Taiwan, Philippines, and in fact, Philippines, Indonesia are on the negative front, and then you have the Indian rupee seeing a 5% cut on a year-on-year basis. So that's the way this year has ended up. Some commodities and equities have done very well. On the flip side, there has been immense pressure on the other end of the market from across indices. So that is the wrap on 2025.
All right, thank you so much, Snehi, for getting us all those details. But now let's put the spotlight on the aviation sector, because Aviation Minister Ram Mohan Naidu, speaking in the Lok Sabha, said that the purpose of deregulating airfares was to help the aviation sector grow. He said that the recent rise in the fares, including after the Indigo crisis, has brought the issue back into focus. Let's listen into what he had to say.
The idea still remains that if the civil aviation network, the aviation sector, if it needs to grow, the first and foremost thing is to keep it deregulated so that the competition survives, more players can come in. Madam, and coming back to the whole deregulation aspect, even though I'm saying that the market is deregulated, let me also come to the fact that according to the Aircraft Act that we have right now, there is power with the central government that in extraordinary circumstances, when there is a possibility that there is a misuse of the air tariff deregulation that we have set up, then there is the power with the central government to interfere and set things right, to cap the fares so that the passenger does not experience opportunistic pricing at that point of time.
All right, so from aviation, let's shift focus to insurance now. Now, the cabinet on December 12th approved 100% FPI in insurance. Now, this bill will be tabled in Parliament today. We spoke to Nilesh Sathe, who's the ex-member of IRDAI. He believes that this move will have an impact on both the insurance companies as well as consumers. Let's take a look at what he had to say.
Whatever was proposed has actually been placed, like FDI increased to 100% and open architecture and composite license. So there is no modification to what was earlier proposed. It will have impact on industry. One, with 100% FDI, there is a possibility more insurance companies may open their shop here, and they will bring with them the expertise that they have in other countries where they are operating. Customers will have more product, better product. And with open architecture, the agents will be in a position to market the products of other insurance companies also.
All right, let's move on. And the big move from the government to enhance the nuclear energy capabilities. Now, approval comes in for the private sector participation in nuclear energy. And on the back of this, ET Now had an exclusive conversation with Chakor Doshi from Valchal Nagar Industries on the impact of the nuclear energy bill on the sector. Let's listen into an excerpt.
I think it will take longer.
Okay.
Because you have to understand, this is one nuclear plant is a huge activity. And this has to be well planned. There are many players in it, including the government, which plays a very serious and an important, significant role. So it will take its own time. I think after a large gap of 10, 12 such years, this is back on the track.
So could you give us a sense, Mr. Doshi, and pardon our curiosity, just trying to understand how this works? Because when you say that, these orders take a very long time in terms of their gestation period and fruition, typically how long a time period are we talking about?
If government takes decisions, then it goes through its processes, and it can take, I would not want to speculate how they will perform in terms of speed. As far as private sector, if it is allowed to get into it in ownership of such plants and or running of such plants, then that's a new one for this country, and it's about to take some time to put all the thoughts and processes and checks and balances in place.
All right, so let's move on and get you the latest on what Union Minister Ashwini Vaishnav has to say. Now, on Friday, he announced that Census 2027 will be India's first ever fully digital census. He said that the exercise will be carried out in two phases, a housing census followed by a population count. Let's listen into what he has to say.
ये सेंसस अपने आप में एक अनूठा सेंसस होगा. This will be a very unique way of doing census because देश में इन 11 वर्षों में एक डिजिटल क्रांति आई है. डिजिटल टेक्नोलॉजीज आर पार्ट ऑफ आवर लाइफ टुडे. हर एक व्यक्ति के जीवन में डिजिटल टेक्नोलॉजीज का आज उपयोग है, चाहे पेमेंट हो, चाहे डिजी लॉकर हो, हर तरीके से डिजिटल व्यवस्थाओं का देश में उपयोग हो रहा है. दिस विल बिकम द फर्स्ट एवर डिजिटल सेंसस. फर्स्ट एवर डिजिटल सेंसस में मैसिव एक्सरसाइज की गई है और सबसे बड़ी बात है कि पर्सनल डेटा प्रोटेक्शन का जो कानून बना है, डीपीडीपी, डिजिटल पर्सनल डेटा प्रोटेक्शन एक्ट, उसके तहत जितने प्रोटेक्शंस और जो राइट्स सिटीजन्स को दी गई है, उनका इसमें ध्यान रखा गया है. बहुत इंपॉर्टेंट है ये फैक्टर. उनका ध्यान रख के सेंसस को कंप्लीट इसका डिजिटल डिजाइन किया गया है.
All right, but with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side.
Welcome back to ET. Now you're watching Market Cafe, and as we discussed all the stocks that we need to watch out for, one stock that will be in focus today is Adani Green, because big relief for Adani Green Energy as SEBI disposes insider trading case which held acquisition-related information via media report. Now, the regulator has said that no UPSI was in existence at the time of the trades that are in question. My colleague Ankur Mishra is here to take us through all of the details on the phone now.
Yes, SEBI has now finally disposed of insider trading case involving Adani Green Energy, and that brings closure to a probe linked to trades ahead of company's acquisition of SB Energy, which was there in 2021. Now, in its final order, the market regulator has held that acquisition-related information was already there in public domain, and therefore the trades in question were executed, and they cannot be the unpublished price-sensitive information, which is UPSI, as per the rule of SEBI. Now, SEBI has clearly stated that there was no unpublished price-sensitive information in existence at the time when trades were carried out, and therefore the regulator has also found no evidence to suggest any communication of UPSI by any of the notices. And as a result, the trades executed by Kunal Shah, Nupal Shah, as well as Pranav Adani was also named earlier and questioned in this case. But now SEBI has concluded that allegations of insider trading are not sustained. And importantly, the regulator has not ordered any disgorgement of any alleged gains, has imposed no monetary policy, and has not issued any market access ban or either direction. And the show cause notice issued on November 10, 2023 has been formally disposed of, and the order comes into effect immediately. And now SEBI has given a kind of clean chit in this matter.
All right, thank you so much, Ankur, for getting us all those details. But moving on, SEBI's board may review the mutual fund industry's feedback on TER proposal cut in the on December 17. Now, my colleague Charu Singh joins in with the exclusive.
Hi, so as you mentioned, the Securities and Exchange Board of India's board is supposed to meet on December 17th, and a lot of things are going to be on agenda. However, a detailed agenda is not out yet. So what we have come to know from our sources is that mutual fund industry stakeholders have come out and given their representations about the recent SEBI proposals for mutual fund regulation overhaul. So SEBI had recently in the month of October actually had come out with some proposals to reduce the term expense ratio by the AMCs, the asset management companies. Now the proposal said that there would be a 10 to 15 BPS cut for open-ended schemes and about 20 to 25 BPS cut for closed-ended schemes, and the brokerage for AMCs, the fees would also be reduced from 12 BPS to about 1 to 2 BPS. Now, the industry stakeholders have mentioned to SEBI that while this could be in the benefit of the larger investors, this is something that we should do after considering the benefit of the investors who invested in the stocks of the AMCs as well, and the brokerage fees should be relooked into. Other than that, the TER cuts should also be something that the regulator has to relook into. So the regulator has also, as per the sources, been on the to rethink the entire proposals in a certain way. However, final decisions or relief would be decided after the board meeting.
All right, thank you, Charu, for all those details. But let's move on. Now, as BRICS turns 25, we have Jim O'Neill taking stock of the matter. Now, China and India have matched the vision, he says, but a broader BRICS risk becoming symbolic unless its biggest members truly align, is the word coming from him. Let's take a look.
Actually, next year will be the 25th anniversary of when I created the idea. And if I look at where China and India sit today, despite their own ongoing challenges, it's pretty much in line broadly with the sort of outline that myself and my colleagues suggested, linked to the sort of 2050 idea of where both places would be. And as I'm sure you discuss often in your show, India is poised to become the third largest economy in the world, and China is very well established as being the second largest. The no is for two reasons. One is because Russia and Brazil, of course, have been, especially in the second decade, quite disappointing. And then more broadly, and maybe we get into it more, the expansion of the BRICS politically into the BRICS Plus has a very sort of strange set of countries that have joined it to make it 10. And it's not clear to me what they are really trying to achieve as an alliance. But if I put it all together, the very fact that they've done that and the complications that the old Western nations like mine and America and Europe are having in trying to deal with such powerful countries that don't necessarily have the same wealth or for all their citizens or sort of political systems in some cases, makes it a very analytically interesting but complex world.
All right, and we've got our with Biocon's chairperson and MD Kiran Majumdar-Shaw to understand their succession plans. Let's go across and listen in.
You've always emphasized on the importance of robust succession planning. I wanted to ask, what are the qualities and criteria that you look for in the person who will eventually take over from your role?
Someone who's very committed and invested in our vision and mission that I've always believed should be about providing affordable access to life-saving and essential medicines. Someone who has a very deep-rooted interest in a science-driven mission, a science-driven business model, and someone who's obviously very decisive and entrepreneurial.
Sarah, have you spotted those qualities already in someone internally?
Well, I think, I'm here for the next several years, and I think I have that time to choose my successor well.
All right, let's move on and let's tell you which are some of the top brokerage reports that have come out this morning. And first up, Maruti Suzuki will be in focus today as Citi has come out with their note on Maruti Suzuki. They have gone ahead and hiked the target price to 19,000 rupees now. They consider Maruti to be their top pick in the Indian automotive sector, where they're saying that there has been some minor changes that have been made to their estimates amid the volume growth, where the volume growth estimate over FY26 and 28 is expected to be 2 to 3%. They have trimmed their margin expectation a little bit, viewing the accounting for the lower gross margin. Now they have raised the EBIT estimate over FY26 and 28 by 0 to 1%, and they have raised their earnings estimate by 0 to 1% as well. So that's about Maruti Suzuki. Citi's note coming in this morning. Other than that, TBO Tech will be in focus as Goldman Sachs has come out with their note. They maintain their buy rating with the target price unchanged at 1,710 rupees. They forecast a 17% revenue CAGR over FY25 and 30. The EBITDA margin expansion from the end of FY26 has been reiterated, and they continue believing in their long growth runway, which is to be supported by shift to luxury travel. The US market entry offers meaningful upside as per them. So that's about TBO Tech. Let's watch out for some action on this particular counter. And other than that, Interglobe Aviation will be in focus as well, as Elara has come out with their note. They maintain their buy rating on this particular counter, but have cut the price to 6,020 rupees, but they do believe that the near-term noise does not alter the long-term story for Interglobe Aviation. The target price cut reflects the lower capacity earnings assumptions. Valuations have been revised as well to 10.5 times of FY26, that is 1 year forward, EV by EBITDA. There are pilot shortages. The company is seeing some temporary blips for the next 2 to 4 quarters that is expected. There could be some capacity cuts, and all these could hamper the growth of Interglobe Aviation in the short run. But other than that, they also believe that Interglobe Aviation is the only airline with assured aircraft deliveries, and that's why they continue to believe in the long-term strategy. But Kanishka believe there are lots more.
Absolutely. Lots of brokerage calls today. Now, let's also talk about JSW Infra. Now, this one because Elara has come out with a report and has maintained its buy stance and a target price of 362 rupees, which is a 32% upside from the last trading price. So yes, a major upside over there. Now, in terms of commentary, they say that FY28, that is seen as a major earnings reset year for JSW Infra. They also say that EBITDA, that could be tripling by FY30. So yes, very positive commentary as far as Elara's note is concerned. They've also highlighted that port margins, they're expected to expand on greenfield containers, logistics as well. And apart from that, EBITDA margins, they're expected to double rail rake. So yes, very positive commentary as far as the EBITDA margin is concerned. In fact, they could triple by FY30. That's the word coming in. So yes, very positive note on JSW Infra. We'll watch out for how the stock reacts to this report. Next up on the list is Lupin. Now, Citi has come out with a report, maintained its buy stance and an unchanged target price of 20 to 60. So yes, major upside is what we are expecting as far as the note is concerned. Now, what it has highlighted is a strategic alliance with Swiss CDMO polypeptide. It has also highlighted the company's entry into high-quality peptides, GLP-1 segment, which is going to act as a major catalyst for the company and its growth going forward. If you talk about segments, the CDMO arm, that could turn profitable over time. So yes, that's the word coming from Citi. It is also said that collaboration with the company is seen as long-term value accretive for Lupin. So yes, we'll wait out for how the stock reacts to the Citi note. Very positive one over there. But Citi has also come out with a note on Hyundai Motor India. Not as positive. It has maintained a buy call, though. It has cut the target price to 2,700. That's down from 2,850 earlier. It says that the estimates have been cut on volume growth weakness, and for the year FY26 to 28, it sees volume estimates, they've been cut by 1 to 2%. Margins have also been trimmed on lower assumptions. EBIT earnings, they've also been cut by 5 to 6%. So yes, some downtick over there. The target price has been cut to 2,700 on the back of these volume estimates that could be lower for the years, quarters to come. So yes, that's Citi's Hyundai note, and we'll wait for how the stock reacts.
All right, but other than that, it has Citi that has come out with their note and their take on the inflation data, where the headline CPI stood at 0.71% in the month of November. December CPI is expected to be seen at 1.6% YOY. FY26 average inflation is to be seen at 2%. That could be below the target inflation that is likely through FY27, but RBI is likely to wait for the new GDP CPI series as well. Other than that, in terms of the stock-specific action, lastly, KEI Industries will be in focus as Morgan Stanley has come out with their note. They maintain their overweight stance with a target price of 4,793 rupees. There's been a strong domestic cable and the wire demand. Power, T&D, infra, renewables, these are some of the sectors that had been key drivers, but data center is emerging as a major growth engine for KEI. Now, KEI is well poised in the power cable segment. That is what Morgan Stanley is believing on KEI Industries. And lastly, Siemens will be in focus as Citi has come out with a note with a neutral rating on this particular counter and have slashed the target price to 3,350 rupees. There's a scope of consolidation, console margin expansion. Smart Infra has the exposure to structurally expand their TAM, but near-term order inflows would likely be volatile. The company is investing in Smart Infra, reevaluating their Metro-Link modalities, but Citi has lowered their FY26 and 28 earnings estimate by 4 to 5%. So these are some of the brokerages that you should be watching out for stock-specific action today.
All right, so lots of stock-specific action, and we'll also watch out for Swiggy, which has successfully raised 10,000 crore rupees through a QIP, marking one of the largest consumer tech fundraisers in India. In fact, the QIP drew strong global as well as domestic investor interest, lifting Swiggy's cash balance to about 17,000 crores. Snehi is here to take us through the details.
Well, yes, so Swiggy is going to be in focus because they have completed or successfully completed the 10,000 crore rupee QIP. The QIP has seen strong participation from both global as well as domestic institutional investors. And now the cash balance stands at around 17,000 crore rupees, which is still slightly low, but
but now it's made Swiggy slightly more competitive to Eternal, whose cash balance stands at 18,314 crore rupees. Let's understand a little bit about the QIP. Opened on the 9th, closed on the 12th of this month. Issue price at 375 rupees per share, which is a 4% discount to the floor price of 395. This is one of the largest transactions in the Indian consumer tech space and the second largest QIP by a non-banking company ever in India. So it's a big amount Swiggy has successfully raised. Now, in terms of what the management had to say, Sriharsha Majeti, the MD and Group CEO, says that this additional capital will give them the flexibility to strengthen the core business, to scale Instamart, which is their quick commerce arm, and also maintain financial prudence. And they will continue to deliver unparalleled convenience, is the word coming in from him. A little bit about the QIP subscription. 21 domestic mutual funds subscribe to the QIP with marquee names like SBI MF, ICICI Prudential MF, HDFC MF, Nippon India MF, and a bunch of others. 8 domestic insurance companies participated in this, ICICI Prudential, HDFC Life, among others. And you had 50 foreign institutional investors that showed interest in this QIP. Capital Group, Government of Singapore, Nomura, Temasek, Fidelity, Goldman Sachs, and a whole lot of others. The utilization of QIP proceeds, the management says that the funding is going to be used for expansion of operations of quick commerce fulfillment work, expansion of their dark stores and warehouses, investment in technology and cloud infra, brand marketing and initiatives to increase the brand awareness market, and inorganic growth, acquisitions and general corporate purposes. So that's the take coming in on Swiggy's QIP, 10,000 crore rupees successfully raised.
All right, thank you so much, Snehi, for getting us all those details. But with this, viewers, we are completely timed out in this edition of Market Cafe. It's a goodbye from me and Kanishka and the entire team. But before we go, let's have a look at silver, because that commodity continues to dazzle around and throughout the year has given more than 100% return and indeed outperforming the return of the gold. Now, where's silver headed from these levels? Is that coming into an overbought territory? Kunal Bothra decodes all of that for us. Take a look.
It's mesmerizing, frankly. I think that's the best word to try and summarize the move which we've seen for silver in the last 6 odd months. But then what was the reason why silver started to outperform gold? And I'll throw in a very interesting perspective. This is more of a statistical rally which has happened for silver with respect to gold. Now, if you go back just about 6-7 months back, April 21st, 2025, when you look at the gold and silver prices in terms of dollar terms, gold was almost at 3,400 levels, silver almost $30 to $33. Interestingly, the ratio for gold silver at that time was almost 104, 105. This was almost equal to the 3 standard deviation bands in terms of outperformance of gold with respect to silver. Now, these are abnormal outperformances which you see in stock prices in asset classes when they go into 3 standard deviation bands. And then they tend to correct themselves in a matter of maybe 6 months, 1 year kind of a time frame. And now when you look at the gold silver prices, you're now looking at 4,200 approximately for the gold prices and 63, 64. So which means almost a 100% jump in the silver prices in the last 6 odd months and a 30% rise in the gold prices.